Did watch last live stream or the first 15 minutes or so that were actually recorded, unfortunately. Sorry about that again. Um, we all know that nothing has changed on the weekly, and we kind of expected that, when we come into Friday's stream and potentially even Monday's stream and maybe even next Wednesday's stream and next Friday's stream, it's going to be the same exact analysis, right? So it's been this analysis technically since right here, right? That's when we start making that analysis and it's actually valid. We've been assuming that analysis would be true of, hey, we're just downtrending on the weekly. We're heading to the bottom right corner. There's not really much else to, care about. We've been assuming that since around 59 to 60K in like all the way back in November of 2021, right? So nothing changed. I don't see a reason for it to change anytime soon. And to be honest with ourselves, this is the first time that Bitcoin has broken down and traded below, meaning for a long time, closed candles below these 200 weekly moving averages. So we have to assume that we've actually gotten weaker, right? So it's the same exact mindset. The mindset that allows you this luxury of, hey, Bitcoin is down negative 30% in one weekly candle. Let me buy the dip, right? If that thought even comes across your mind, you have to remember the fact that the reason you are even able to entertain that thought at all is the same reason that tells you, hey, don't buy the dip. Like, hey, we're heading to the bottom right corner. Just fucking like go fuck off. Like, go do something else. Go hang out with your girlfriend. Go train her dog, right? Go um, ride your bike, find a new hobby, hang out with your kids, whatever, right? Go do something else. It's not going to matter. It probably, isn't going to matter for a long time, right? And just assume that the next level is going to get tapped and the next level after that and the next one after that and the next one after that and the next one after that. And here we are, right? That has been the mentality. And I'm not going to sit here and bullshit you and say it has been the mentality for all of this price action ever since November. Because if we're being honest with ourselves, it's actually been better than that. It's actually been the only times when we have not entertained that mentality are the only times in the past 7 or 8 months that you see where we actually bounced on the weekly chart or did something different that wasn't downtrend, right? We were bullish for all of this push upwards, including the exact Pico top. We flip bearish at 45K, we ride that wave downwards, right? We shifted into a sideways mentality here. We shifted into a sideways mentality here. We were bullish for the last, right? The latter of that move, that 10% move, right? After we showed strength. We absolutely slayed this market the past 8 months with a very simple concept of we are heading to the bottom right corner. That's this right here. Whatever that means is totally arbitrary. It doesn't fucking matter. It could be 30K weekly demand for the 18th time this or in the past 2 years. It could be the 200 weekly EMA. It could be the 200 weekly MA. It could be 12K. It could be 6K. It could be 3K again. It could be zero. It does not matter. The number is arbitrary. We're just giving ourselves levels to work with so we can take things one step at a time and we don't just, flat out assume zero. But if zero happens, right? AKA Luna, AKA, waves when it's at $60 and then goes to $3 in a month, right? If zero happens, you should be just fine based off of the exact same mentality that had you just fine here at 60K. The mentality doesn't change, only price does. You have to find a way to stop thinking linearly, right? In terms of price, you have to stop thinking linearly. You cannot make sense of this chart. Neither can I. You have to stop making or interpreting things from a linear perspective. You are capping your imagination, and therefore you are capping your gain or how much pain you avoid. You're putting a limit on it. And the market is absolutely fucking ruthless. Don't believe me? In 2020 alone, we got not only March COVID drop where everything died negative 60% in like 4 days or some shit, right? And oh, by the way, there's been like I don't know what, 4 negative 20% daily candles ever since then. Oh, and then we had oil literally went to negative $40 a barrel in oil futures in a month after, right? A month after we had just, everyone's still coping, complacent, recovering from this March COVID drop. Everything's grinding back upwards because finally people have capitulated and given up hope on crypto. And we're watching as oil futures go down to negative $40 a barrel next month. The next month, right? And here we are now, Bitcoin's trading below the 200 weekly moving averages for the first time ever, right? And we watched a multi-billion dollar asset go to literal zero in days. Luna, did it not? You have to stop putting a limit on your imagination on what can happen here for price. That goes both ways, does it not? Did we not slay this entire bull market? Was I not sitting here telling you, hey, think big, higher highs, higher lows? Bears are fucking dumb. They are dumb. They don't understand the context of the situation. No one knows where this stops. Neither do I. That is especially true when we're trading into price discovery. Take those two words literally. We are discovering what price we are going to trade at. That's it, right? It's that same exact mentality. That has us bullish for this entire piece of price action. Oh, and by the way, including the exact Pico top. Exact Pico top. I am just as bullish at 64K as I was all the way down here at 7K. Does it fucking matter? Now, here, June 24th, 2022, does it matter if I sold 64K or I don't know, 57 and then got heavy out of the market at 52 after getting chopped up once or twice because I'm sitting here trading the range, assuming trend just the same way that I have for the past 7, 8 months prior to this. And now my winner's mentality is no longer rewarding me. So I'm forced to adjust and assume a range. And we break down below 52K. And then I call it quits because now our range is breaking down. And then I turn my logarithmic way of thinking on and assume downside into, oh, I don't know, maybe 47, maybe 40, maybe 30, maybe 22, right? Maybe the 200 weekly moving averages, maybe 12K. Is that not a winner's mentality? Fast forward 2 years. Did we not win as a result of making that analysis and applying that mindset? Look back in the past 7 or 8 months. Have we not won? So what exactly is the urgency to so desperately stray away from that winner's mindset? The same thing that has allowed you the luxury of deciding, do you even want to buy this dip? Because of that linear way of thinking of, oh, the FUD is priced in a little bit. We're getting a little, carried away. Everyone's getting a little ahead of themselves. It's kind of peak fear sentiment. Maybe I'll just throw some money at Bitcoin, right? Sure, that can be a valid sort of way of thinking. And you absolutely would have benefited because we're up 20% off the lows. Cool, right? Same thing we said back here, was it not? Was it not? It was exactly the same. Hey guys, the 200 weekly EMA is the 200 weekly EMA. It tends to act as this historical bottom. It is this major support level on high time frames. If we were ever going to bounce, it makes sense to bounce from the 200 weekly EMA. So if you want to just throw some money at Bitcoin at the 200 weekly EMA and, continue expecting it to downtrend and in your buy to not really mean shit and be underwater very quickly. But if we were ever going to bounce, that's probably a good reason to do so. Right? The same mentality that allows you that luxury of way of thinking is the same mentality that got you there in the first place. Why so urgent to stray away from it here? Especially when we have not done anything significant. This is the daily, right? We're using the daily to portray the weekly trend. Has anything changed here? Nope. Okay. Well, the weekly's still bearish then. We can very quickly come to that conclusion, right? It takes everyone 4 seconds. So now I'm going to come in and tell you, hey guys, within 4 seconds, I want each and every single one of you to tell me what is this trend, right? So we just talked about the mentality for the past 7 or 8 months over the grand scheme of things, right? But we know that within those 7 or 8 months, we're not just screaming downtrend, 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 and hoping that every single bounce gets reversed and missing out on 20%, 30% moves, 10%, quick pumps. We're not doing that. So, what's the more local, relevant analysis? Well, the past 2.5 months or so. What is that trend? Right? Within 4 seconds, each and every single one of you, I don't care how experienced you are. If you don't believe me, go show your chart. Sorry, go show this chart to your 10-year-old and ask them which way is it heading. Which way? It's heading to the bottom right corner, is it not? It takes you 4 seconds to realize that. You don't need to be a rocket surgeon or a brain scientist, right? You don't need to. 5 seconds is all it takes to determine this chart is heading to the bottom right corner. Because we are human, we need ways to justify things and further interpret the information so that we can digest it better. And if we understand something better, we can apply it better and take action off of it. So we use the 4 hour 200 moving averages, right? They've done a pretty solid job of not only portraying the momentum, portraying the trend, but on top of that, they have so gracefully acted as these very clean and precise macro tops. So theoretically, we could bounce all the way up to these 4 hour 200 moving averages. And the same argument that I'm telling you right here, right now, of we are headed to the bottom right corner on this time frame, you could show this to a 10-year-old and they would tell you the same thing, would still be valid. It would still be valid, right? Now, that is a valid analysis. Is it actionable? Do you, right? I'm talking to you individually. Do you want to miss out on a 22% bounce? Let's be honest with ourselves. We just discussed how each and every single 20% bounce was fucking meaningless because fast forward 7 or 8 months and here we are trading at 20K, right? So, all these bounces didn't mean shit because you totally could have just fucked off for the market and went and got and did something else for the past 7 or 8 months and you would have been just fine and you probably would have out traded 90% of people just by doing that alone, right? But let's be honest with ourselves. Do you want to miss out on this 20% bounce? If theoretically it could happen, right? We just said we could bounce 20% and still be bearish. Valid analysis. Is it actionable? Do you want to miss out on 20%? Obviously not, right? I don't either. So what we have to do is we have to scale things down to even lower time frames to give ourselves a way of portraying the intraday trend, right? Because we're using the daily to portray a weekly trend. We're using the 4 hour and the 4 hour 200 moving averages to portray that daily trend. So we need something to portray the intraday trend. In between all of these daily candles, there's price action occurring. We can't see what the fuck is going on because each one of these represent 24-hour period, right? A lot happens in 24 hours. We need a quicker way of adjusting and giving ourselves an actionable analysis to work with. Bonus points. I'm going to quiz everyone. What has been the actionable analysis that we've applied? Let me give everyone like 10 seconds, but you should know the answer to this. It's been a range, right? Previously, it was, hey, we are downtrending. right? We are in a trending environment. This 15-minute 200 trend consistently local tops. Even when we broke down below that range, we retested it along with the 15-minute 200s. We then very quickly and very sharply moved away from those 15-minute 200s. Probably some sort of mean reversion that made it pop up slightly back above. But after losing it once again, then again, using them as these local tops and resistance for the overall downtrend over the course of a week for about negative 40%, right? And even prior to that, too, we were using them as resistance even within that range that we were trading in for over a month prior to the breakdown. After the breakdown, we used them again. We didn't see them get used for another couple days or so. When we did, we had strayed far away from them. So the kind of overthrow back into them saw us pop back above. This probably caught you off guard. I'm absolutely certain that it did. If you go back to June 16th's market update, right, it probably caught me off guard as well. We are forced to assume some sort of trend, but we're also able to justify that that analysis is now invalid as soon as we lose that exact same trend, do we not? Right? And then we go back into trending down all over again, and we see another, oh, I don't know, what is that, like negative 15% drop as a result. So, yeah, thank God you readjusted over here after being wrong, right? Because you avoided another negative 15% drawdown. I don't want to participate in that negative 15%. I can't imagine you do either. So what is the analysis? Even though it wouldn't have worked back here, it's still a winner's mindset, right? The way I always compare it is if you're playing blackjack or 21, you hit on a hard 16 when the dealer's showing a face card. Statistically speaking, that is the more probable bet. You're more likely to be paid out in the long term if that is the bet that you're taking. If you're standing on that hard 16, you're losing. Even if you manage to win that hand statistically over the long course of time, you are prone or kind of setting yourself up to lose. We hit on that hard 16 and our dealer was showing a face card, right? We just busted. Oh well, let's suck it up. Let's cry about it for 5 minutes and get over it. Trend all over again, negative 15% drawdown. Wow, thank God we busted on that hand because I would not have wanted to double up on it, right? And then when we flip that trend all over again, what's the analysis? It's the same one that we made back here, right? It didn't work last time, but it's the winner's mindset. When we show, or when the dealer shows that face card or a 10 or whatever, and we have a hard 16, we're going to keep hitting. We know that that's the right bet to make. We are forced into assuming that this is a showing of strength. That was the analysis we made. Martian was actually short during this time. And I said, hey, if we break down below the 15-minute 200s, I would feel more comfortable in that short. But as long as we're still above those 15-minute 200s, there's a chance that Martian short is not going to look too well, right? He ended up getting stopped down on his short trade, unfortunately. But we did continue the snowball analogy. We did show that significant sign of strength, even though this is only a 15-minute time frame. We saw an additional 10% bounce as a result. And notice I'm not going from, oh, when we first barely peeked our head out above the 15-minute 200s. I'm not here to sit here and claim clout and tell you, haha, I told you so. I caught the bottom and bulk majority of this move, right? I'm here from, hey, when was this analysis actionable? When could we actually look at the chart, make this analysis, and play off of it? Here. And that's exactly what we did. That's when we came in. That's when we acknowledged the sign of strength. That's when we said, hey, we're forced into assuming that this is a snowball. And now we just see how long this snowball rolls down the hill. I don't know, right? Maybe it's the supply zone. Maybe it's the hourly 200s. Maybe it's the 2 hour 200s. Maybe it's the 4 hour 200s. We don't know, but we have to think big. We have to think logarithmically until we lose the exact same trend style analysis that made us bullish in the first place over here, right? There's always going to be that impending threat that we might continue bouncing. And if you're still making that bearish argument on the weekly, even though the lower time frames are quite clearly uptrending, you are absolutely setting yourself up for failure. Now you're coping. Now you're complacent. Now you're relying on a high time frame analysis with a 20% gap to your daily trend and a 40% gap to your weekly trend. And you're hoping and praying that those trends will take priority right here and right now, even though we're currently uptrending, right? That's not being actionable. That's coping. That's complacency. Only after we lose the exact same argument as to why we were able to say, hey, this is strength, we might continue bouncing. Only after we lose that argument can we then make a new assumption. What was that assumption? It was, hey guys, we're forced into assuming downtrend amongst all time frames again. Why? Because we lost our strength on the low time frames. So if we're downtrending on this low time frame, we know that we're downtrending on the daily, we know that we're downtrending on the weekly. Each and every single time frame is downtrending. Regardless of which one you look at, you should come to the conclusion of we are heading to the bottom right corner. How you do that is arbitrary. It's totally up to you. I could not give two shits. Whether you use the 200 moving averages or Ichimoku or some other moving average or stochastic RSI or whatever other trend indicator MACD, I don't care, right? It's totally arbitrary. I could not care less. But at some point during this price action, you should be able to tell me on any time frame, hey, we're downtrending, right? You look at market structure, you assess that, we're downtrending. When you look at the 15-minute 200s, you assess that, we're downtrending. When you look at Ichimoku, we're downtrending. When you look at Bollinger Bands, we're downtrending, right? When you look at patterns, even, you can sit here and draw trend lines all you want. I don't even know where my trend lines are. That's a downtrend, right? So, regardless of the TA, we have to assume downtrend amongst all time frames again. Even though it didn't work out, is that not the winner's mindset? Is that not what helped us avoid this negative 40% drawdown in 1 week? Is that not what helped us avoid this drawdown? Is that not what helped us avoid the drawdown prior to that? Right? We have to keep applying the winner's mindset. The market forces our hand into that. Anything else is likely to be chopped up and or probably wrong. We also discussed the idea that we might chop sideways. I planted a blueprint, a kind of rough draft for what a range might look like. And we briefly discussed it. Actually, not even briefly. I think I spent 15 minutes on it on Monday, either Monday or last Friday's live stream. I can't actually remember. And I said, "Hey guys, this is all foresight. We might not even use this because at the time we weren't even below the 15-minute 200s yet, right? We were still uptrending. So we said, "Hey, we're going to assume downtrend, and then if we downtrend and assume downtrend, only for us to pop our head back up and reclaim that trend all over again, and all of a sudden we go from one trend over the course of a week or so and negative 40%, right? That's about a week long. We make one analysis, maybe two analysis. But we make one analysis, we have one trend. All of a sudden, now we're making a new trend analysis. That lasts about 2 days or so. Now we make another trend analysis. That lasts about a couple hours. Then we have to make another trend analysis because we're back above the 15-minute 200s. So all of a sudden, we go from one trend over the course of a week to now we have had 3 trends in 2 days, right? We start making that trend analysis on June 2020 or June 20th. We have now made 1, 2, 3 analysis as of June 22nd. It saw 10% push, negative 3%, and not even 1% in each direction, respectively, right? 10, negative 3, 1, not even. What does that tell you now? Hey, the trend is we're probably not trending. We're probably not trending. We're probably just going sideways. If all of a sudden the same exact analysis that has previously been alpha to you for, especially if it's an exaggerated um, example, right? 1 week, negative 40%. Go find each and every single time that we've had 1 week, negative 40% drawdown for Bitcoin. It's probably a lot more than most asset classes, but it's still not very much, right? It's a very exaggerated example. So when you have an analysis or a methodology, an approach that is that much of an edge, only to see it absolutely fail for the next 2 days thereafter, right? Even though 10% is pretty damn good, negative 3% is really nothing to cry home to mom about. 1% is absolutely fucking abysmal, right? If that is now the case, what does that tell you? It should tell you you need to adjust. In this context, what does that mean? It means we need to stop assuming trends. We're not trending anymore. That is your trend analysis. Is there is no fucking trend. Stop making a trend analysis. That's it. So now we're at the point where I don't really care how much these 15-minute 200s are getting respected within the range. I'm not paying attention to them. At these range lows, I'm saying, hey guys, we need to not be overly bearish here because we kind of chopped up a bit. And this is the ideal zone for us to form range lows. So you need to not be adamantly bearish. You don't have to be bullish because the range is still forming. It needs to kind of convince us that, yes, we are in fact ranging, right? We need to see some sort of reaction. And that was around here when I'm saying this, by the way. I was in altcoin VIP chat. Edmund knows, Maverick knows, whoever else was reading that chat knows, right? We're saying, hey, you need to kind of keep this idea in the back of your mind that we might just be ranging, and if we are going to form a range, this is a pretty good spot to do so. So you don't have to be bullish, you don't have to be taking longs, but at least don't be adamantly bearish. Don't be in the same sort of mindset where we're assuming full-fledged downtrend across literally all time frames like we were back here, only to see negative 3% drawdown, right? Don't be in that mentality. It's a loser's mentality at this point. It might pay off for you. And in that case, it's equivalent to like if you stood on a hard 16 when the dealer's showing a face card and you actually win that hand somehow, right? But it's not the winner's mentality. It's not the winner's approach. So now that we've have kind of confirmed this range, and in fact, price action has showed us, hey, that is support. We are going to further bounce from here and trend upwards intra range into the opposite side of the range. Now that you have refused to be overly bearish at the range lows, why would you fall victim to being overly bullish at range highs? It's absolutely fucking comical to me. I do not care if we end up breaking out above this range and further expand from here. That's how we're going to adjust to these lower time frames and scale assumptions upwards to start looking for higher targets, right? We can look for something like 22.8 because there's probably some sort of resistance there. We can look for, oh, I don't know, maybe the 2 hour 200s, even though they've been totally irrelevant for the past month. We can look for maybe the 4 hour 200s because those have been very relevant the past 2.5 months, even though they're not relevant right here, right now, right? We can start to think logarithmically. We can start to apply a trend style analysis once again. But as of right now, the same people that are getting absurdly bullish right here are the same people that had this fret, this fear for their lives that we were going to resume the downtrend and put in a brand new low amongst all time frames just 2 days ago at range lows, at low time frame support, after a trend style analysis had quite clearly no longer worked, right? Don't fall victim. It's absolutely comical. I want you to know if you're bullish right here, right now, I'm making fun of you on Twitter. I am. I've been using a sarcastic, a satirical approach to get my point across to all my Twitter followers, which don't get nearly as much of a detailed analysis as you guys do in these market updates and these streams. But I've been using that sort of approach. I am quite literally laughing at you. If you are bearish at range lows 2 days ago and now screaming for 25K at range highs, I'm laughing at you. So I don't know. Last time I said this, we traded in the range for a fucking month as everyone on my Twitter timeline lost their mind. Lost their absolute mind. I watched even Twitter accounts with 500,000 followers and some of the most respected people in crypto go bullish here, go bullish here, go bullish here, go bullish here. It was absolutely abysmal. It was really tough to watch. Not gonna lie. Don't fall victim. So we've had a winner's kind of approach, and so far it's been winning, right? We're now in this new sort of analysis. For the past couple days, I've been saying, hey, range, we're in a range, we're in a range, look out for the range, we're probably going to range. Hey, we're ranging. These are range lows. Hey, we might go to range highs. If we go to range highs, don't be surprised. Now we just tapped range highs. Now I'm saying, hey, if we go back to range lows, don't be surprised. If we end up breaking out above the range, then cool. We can start applying a trend style mentality again, but expect the range, right? That's the same thing that got us here in the first place. The same reason why none of you should be shocked that we went to 21.5K is the same reason why none of you should be getting bullish at 21.5K. We're just ranging. So today's market update, I said, I don't know if anyone caught on to this, but I said, hey, here's my edition of today's market update. It's just yesterday's market update. Everything that you need for today was already said yesterday, which was already set the foundation for the day before. This is the winner's mentality. You should not want me to come into these streams and make a brand new analysis each and every single time. You should not want to read tomorrow's market update and have a full 180-degree sort of take on things each and every single day. We find an approach that works. It either works or we're forced to adjust. From there, it either works or we're forced to readjust. It's constantly this cycle of you are either right or adjusting. There is no right or wrong. If we break out above the range here, I'm not wrong. I'm adjusting. If we head back down to range lows, I'm right. If we break down below the range, I'm adjusting, right? That should be the mentality. That is the winner's mentality. How you come to that conclusion is totally arbitrary. The mindset matters more. It matters so astronomically more than anything that I can draw on my chart or any sort of key moving average I can show you or any sort of indicator that you can pay 2 grand for annual access for, right? It matters so much more than all of that. That's what determines, are you a winner? Are you a loser at the end of the day or at the end of the year, right? Because you might win on a daily basis, but winning on a yearly basis is an entirely different beast. That is the reality of the situation that we're in for Bitcoin. Hopefully, that gets the point across pretty well. So, quickly, let's go to ETH. This is actually more trendy than BTC. So, ETH has already kind of broken out of this range and it has now established a new range, right? So, it's a little bit more trendy. It's clearly legging upwards harder, right? And it makes sense when we go to ETH BTC, you'll see why. So the current kind of levels that we're working with for ETH are this is support, this is resistance, right? Sorry. We discussed this previously in last live stream. I don't know if it got recorded. I'm not sure actually. But we did say, hey, this is just simply level to level. So if we break out above this level, we're just going to assume the next one, right? We got about halfway there so far. We nearly retested this level again, and we've seen a decent reaction as a result. So nothing to cry home about, right? To be expected. You break out above one level, you now open up the gate of opportunity for the next level, and we're going to apply that exact same way of thinking here as well, right? So the local trend for ETH is bullish. It is uptrending. It is showing strength. How you come to that conclusion is again totally arbitrary. Maybe it's 15-minute 200s, maybe it's hourly 200s, maybe it's 30-minute, maybe it's whatever, right? But you should kind of come to that conclusion. So there's a possibility that we form a range from 1260 and use something like 1050. So maybe a much bigger range, a much more volatile range with this kind of acting as like the mid range. So that's a possibility. Keep your mind open to that. But within that, we are quite clearly uptrending, right? Intra range, even if that is the analysis that we come to make, let's say sometime next week. Um, I don't think there's anything else really to take note of for ETH. So ETH BTC has finally done at least something significant, I believe, last time I checked. We are kind of trying to peak our way back up above this resistance level, which was previously anticipated to be support. We didn't get any sort of reaction. We used it as resistance, and now we're kind of breaking out above it, right? So to kind of back up this idea of, hey, ETH BTC is trying to reclaim this pretty key level, we need to find some sort of foundation of strength on these lower time frames. Where do my moving averages go? Right. So on a weekly basis, meaning the trend for the past 2 years, or really I should say year and a half, was totally uptrending. Right. We portray this idea via the 200 daily moving averages. So, yes, I know that everyone has gotten accustomed to these moving averages acting as this just beautiful support and resistance, pico bottom, pico top. Cool. But get that out of your head, right? I'm more so using them to kind of just portray this trend because I have the IQ of a fifth grader and I need pretty colors to tell me and further justify certain ideas so that I can digest what the hell is going on in this chart. Right. So I use things like market structure and I use things like these moving averages to give me an understanding of what the hell is going on for this price action from, let's say, February 2020 to all the way to January of 2022, right? And that is we're uptrending. So for those 2 years, we are uptrending. For this 5 months, if you're still sticking with that exact same analysis and you're using these 200 daily moving averages, you hate your life, right? We shot below, you go back above, we go back below, only to go back above, only to go back below, right? So for these 5 months or so, we're just going sideways. So the large ship, as I like to say, and I'm totally stealing this from Cantor and Clark, the large ship is slowly turning. It's going to take a lot of momentum to turn that large ship once again, right? This was the large ship turning ever so slowly. It took about 4 or 5 months. That ship finally turned. It finally got enough momentum to steer in the opposite direction than the one that it had prior been in for 2 years. We're still kind of in the midst of this large ship turning ever so slowly. Technically speaking, we could bounce all the way up to here for ETH BTC. That large ship would still be turning very slowly, right? Meaning, if a 2 year long trend that took 4 or 5 months of chop sideways to finally resolve in either direction and either resume the trend or reverse the trend, when that trend finally breaks, I don't know, it's probably going to be significant. So far, so good, right? We've been making this analysis, but on a more actionable time frame, and we've just simply been scaling it upwards to this one. And that has been our reward thus far. Theoretically, even if we bounced all the way back up into these 200 daily moving averages, assuming that we would do so sometime in the next 2 weeks or so, we would be somewhere around here, I would guess. and we would still be rewarded, right? On a minimum reward, not a hypothetical, potentially maximum reward if we have a crystal ball, but on a minimum reward. But again, we're portraying this idea via a lower time frame, more actionable analysis. It's still high time frame, right? But it's lower than a 2-year long trend. So instead, we've used something like, I don't know, what's been portraying the couple month long trend at a time, a 4 hour 200s, right? 2 or 3 months, cool. 2 or 3 months, cool. 3 or 4 months, cool. 3 months, cool. A month, cool. Month and a half so far, right? 2 months almost, cool, right? 4 hour 200 moving averages. So we're portraying that trend and we're giving ourselves, it's still not extremely actionable, but it's a hell of a lot better than just making one analysis for 2 years or 5 months and just hoping and praying that it works, right? And just totally neglecting potentially, I don't know, maybe let's say 20% bounce on ETH BTC, right? 20% outperformance from ETH to BTC, and just totally neglecting all of it, and then hoping that the analysis that we made 2 months ago, which has been the analysis prior, it was 5 months, and prior to that, it lasted for 2 years, and just hoping that it continues to be true. It's a hell of a lot better, but it's still not amazing. So, if we manage to reclaim these 4 hour 200s, that really does set the stage for at least a bigger push upwards. If not, we turn the whole ship back bullish again, right? It'd be a very difficult thing to do, we would assume, because it's been a 2 year long trend, a 5 month long trend, and because the trend, the most recent analysis on that high time frame was only 2 months, we would assume that we still have some juice, right? We still have long way to go before we can finally build enough momentum to turn this very large ship back in the opposite direction once again. But it would damn sure be a good start. So once that happens, we have to open up our minds a little bit more. All of a sudden, the same mentality that we've been in for the past 2 months or so is no longer applicable. So that means it's now invalid at that point, right? So we would very much be forced to adjust if ETH did anything similar to those lines. In the meantime, we're sitting here screaming, hey, the 4 hour 200s, 4 hour 200s, right? Month long trends at a time. But we need to find something a little bit more actionable than that. What is it? It was the hourly 200s. So the most recent analysis that we made was actually, hey, we're losing the hourly 200s all over again. After using them as this very amazing local top for that entire 2 month long downtrend, right? So we were so weak, we were so parabolic within our downtrend that we weren't even testing the daily trend, those 4 hour 200s. We weren't even testing those because we were downtrending across an intraday trend, something that you can't even see when you zoom out to the daily. It just looks like a bunch of down candles, right? You can't even see it. Some of these pushes upwards are totally hidden and it just looks like a wick on the daily. So we were so weak that we used this trend as resistance and continued to break lower as a result. So when that trend gets reclaimed, we're forced into assuming, hey, we might scale this upwards, right? We formed a little bit of a snowball of strength and pretty damn good. I mean, it's not much, but for ETH BTC, it's still pretty damn good. We got that push upwards into our resistance. We lose our snowball all over again, right? So now at that point, we're back into being forced into a bearish mentality with the same kind of context that we were in for all of that downtrend. Paid off pretty damn well, right? Unfortunately, we hit on our hard 16 when our dealer was showing a face card, only to reclaim that trend all over again. At that point, we now have to assume chop, by the way, not full fledged uptrend, but chop. Now we're threatening a reclaim of a more significant trend and a more significant level, right? So in hindsight, we can look at this and say, oh, that was a bear trap. That was a deviation. That was a fluke. That was a fake out, right? Whatever arbitrary definition you need to justify to your puny little brain, just like I do, that, hey, we were wrong here, right? Because we are wrong. We just kind of say, hey, we're adjusting. So we're never wrong, right? But whatever arbitrary definition we need, we apply it here. We assume chop, and actually, we're now threatening a reclaim of this zone. So, in hindsight, this was really a deviation. This was really a bear trap. It was really a fake out. It was a fluke, right? And we are truly forming an uptrend on these lower time frames. So, again, as long as that continues to be true, ETH BTC looks pretty damn good on these lower time frames, does it not? Meanwhile, don't lose sight of the higher time frames. So we have high time frame resistance. Obviously, in order for us to test that high time frame resistance, we need to be uptrending on the lower time frames first, do we not? Right? You can't build a snowman without building a snowball first. That was our snowball, whether we knew it or not, which in fact we did not, right? Uh, and now we're building it. Now we see how much we can build on top of that snowball. If we do something like this, we're now forced into assuming, hey, that's not just a snowball anymore. That's like the body of a snowman, right? If we go on to reclaim 200 daily moving averages, along with whatever key levels kind of confluent with those, hey, that's not just the body of a snowman anymore. That's a full fledged snowman. He has a carrot for a nose. He has buttons, going all the way down his belly. He has a nice little scarf. He has a nice little hat. He has sticks for arms and legs, not legs, right? But now that's a full-fledged snowman. Now we have to assume bullishness, uptrend across all time frames. But it's a scaling kind of thing. It takes time to build that. So one thing at a time, one step at a time, one time frame at a time. Bitcoin dominance is, of course, going to be similar to our ETH BTC analysis, but in fact, it is a bit more exaggerated. So where ETH BTC is kind of testing its daily trend, Bitcoin dominance is now testing its yearly trend, right? So this has been the trend for the past, what, year or two, year and a half at this point. We've broken out of that trend, right? We've very much started to turn that large ship ever so slowly in that opposite direction. And now here we are retesting already. So the way I'm kind of comparing this and thinking about it is imagine if ETH were already testing its 200 daily moving averages. Those, right? So that's kind of the way that I'm thinking about it. Other than that, there's not